Today's Animal Spirits is brought to you by Masterworks. Michael and I have had Masterworks CEO and founder Scott Lynn on the show twice, and the first time he was on the show, afterwards we said, we want to invest in art. So we set up a call with Masterworks. They walked us through the process. It was very easy.
Did we buy the same paintings?
It may have been. I'm looking at my portfolio right now. I'm a little overweight Basquiat. I have 2 paintings by Basquiat. I have 2 paintings by George Condo. I'm a little overweight there. I have a Cecily Brown, a Mark Bradford. So I've got 7 paintings in my portfolio.
You seem to be a little light. I'm not an expert, but you seem to be a little light on emerging artists.
All right, that's what I have to fill in. All right, let's do it.
You got to fill in those holes.
Yeah, but it's cool. Once you have your portfolio up on a quarterly basis, they start updating the values. So you can see these painting values go up in real time. If you're interested in getting into art, Animal Spirit subscribers can go to masterworks.io today. That's masterworks.io/animal spirits. And see disclosures at masterworks.io/disclaimer. Welcome to Animal Spirits with Michael and Ben. After this show is over, we're done recording this, I'm heading home to help my wife pack up the car for a family trip. Now, I say trip because this is not a vacation. We have kids, 7 and under. You're kind of in the same boat as me, young kids. When you take kids on a trip, that is not a vacation, right? This is the kind of thing where you almost need a vacation when you get back from the family trip.
Mm-hmm.
But I'm doing Clark Griswold style. Car top carrier we have.
Who's Clark Griswold? Just kidding.
If you try to give me a hot take that National Lampoon isn't any good, we're gonna have to end our friendship here. Car top carrier. I successfully, I think.
Wait, what did you just call? What? Car top carrier? Oh, okay.
You know those things you put on the top of the car to pack?
Wait, hold on. Let me ask you a question. What is that thing? It looks like a I don't know, like a box on top of a car. Is that like extra luggage if you want to?
Yeah, so you can fit.
Space?
Yes, according to the one we got on Amazon, you can fit 4 luggages up there.
Okay.
I don't know. We'll see. I'm
Googling
successfully.
Car top carrier. Okay, I see.
I successfully put on a bike rack because biking is a new thing in our family that we like to do all the time. Hoping it doesn't fall off on a 3-hour trip to northern Michigan.
Wait, so you've got luggage on the top, cars, bicycles in the back?
Yes. Yes. If both of them make it, I will consider it a successful trip.
How far is this? How far a drive are we talking here?
2.5 hours.
That's manageable.
I hope. I can picture myself picking up a bike tire on the side of the road at some point. But yeah, when you're a parent, you don't go on vacations unless you leave the kids at home, right?
Correct.
That's a trip. And we're going, there will be 6 kids under the age of 7 there. Should be chaotic. So I got a little perspective from an old woman I've never met before this weekend. So my little guy, 4 years old, taught himself to ride his bike like a week ago.
What?
He just got on his bike, and I don't know. He's like a physical freak.
Wait, training wheels or no training wheels?
No training wheels.
Wow.
He's always used the Strider bike, so he liked that, and then he just said, I wanted the pedals, and he did it. So we've been going on bike rides all the time, so that's our big thing. And my kids have always been fairly well behaved at night. Like we lucked out. We have 3 kids who are very good sleepers. We don't have like wake up in the middle of the night kind of stuff. But my 4-year-old daughter woke up this weekend on Friday night and was up for like 3 hours. Just couldn't get back to sleep. We weren't in our house. We were up north, and she just couldn't find it. And so we had a terrible night sleeping. And you wake up in the morning, you feel like you're hungover just because you didn't sleep very much. And so kids were restless, and all right, fine, get on the bike. So we go for a bike ride.
Wait, what time was this?
And this is 9 in the morning.
Okay, I thought you were talking like 3 at night. Like,
oh,
you can't sleep.
We powered through. So I'm a little cranky at this point. We don't do this often, but I was a little cranky, and a little annoyed at the kids at this point. They were screaming and yelling and whatever. So we had gone on a bike ride. And while I'm feeling down on myself for having a bad night, we're riding our bikes, and it's me and my 3 kids. So I got one on the bike trail behind me, my little guy next to me in his mini little 4-year-old bike, and my 7-year-old daughter. And this old woman, as we're riding over this bridge, she kind of looks at me and she goes, "You, sir, are a very rich man."
Oh, beautiful.
And just put me back in my place with a hashtag perspective.
Wait, how'd she see your portfolio?
Nice. She knows I went short this week because the S&P's down 3%. Yeah, so it's funny how a stranger can put you back in your place after having a bad night. So
that's great. I love it. You are all over the microphone. What's going on?
Am I? I don't know. I'm very fidgety, Michael.
Let me ask you a question.
Okay.
When you went to Marco Island, did you bring the kids or was that just you and your wife?
That was a vacation, no kids.
Okay. Because my wife and I are discussing the idea of maybe going away for the first time with our kids. We haven't done it yet. And Marco Island came up as a place that's kid friendly. You stayed at the Marriott, right?
It is kid friendly. They have a nice little pool for the kids and stuff. Yeah.
All right. What do you think? Should I do it?
Kids on a plane?
Kids on a plane.
It's tough. That's hit or miss. I think you just have to pencil in at least one screaming outburst from either you or your significant other, right?
Actually, I have a quick funny story. We were at a public pool this weekend, and Kobe and I were playing. I was flipping him backwards, and he was like, more, again. And one time, the old, we flipped too hard, water down the tube, coughing. I know where this is going. I'm like, oh God. Pat him on the back, starts vomiting.
In the pool?
A lot. On my shoulder. And so I'm looking at the lifeguard like, and all of a sudden I hear, pool's closed.
Oh no.
There's like 100 people in the pool. Everybody out.
Was everyone staring at you like, thanks a lot, jerk?
A good Samaritan came over, gave me a cold bottle of water, and goes, I've been here, pal. I thought that was very nice.
Yeah, that's kind of thing where if you're a parent, you see that happen, you are just happy that it's not your kid. So for you to happen, that's like a nightmare.
So I come back and like Kobe's head is on my shoulder. I'm sort of got this look on my face. And Robin's like, what did you do?
Spin zone. At least he didn't crap in the pool. You know, it could have been worse.
True. First time vomiting, by the way. He's 4 years old. He was not we had never had that before.
We haven't had much of that either. That's not bad. Speaking of vomiting,
the markets?
Kind of. No, I mean it's the S&P's off 3%. All right, I'm infatuated with this inflation stuff of late. So I put this chart in here that I created. It shows the last 5 years.
What does vomiting have to do with inflation?
I don't know. People.
Oh.
The takes. I don't know. I got nothing. So it shows the last 5 years of U.S. inflation rate over the trailing 12 months and the 10-year Treasury rate. So they basically track each other for 4+ years.
Why do you only go back 5 years? Because they always pretty much track each other now.
Yeah, I'm sure I could have gone back further. But just in recent months, and I think this morning, it sounds like because we're having this awful sell-off in the S&P of 3%, Treasury yields hit like 1.2%.
Hang on a sec. Just because the S&P 500 is only down 3%, that doesn't mean that the parts of the stock market aren't getting annihilated. I don't like that whole market's only down 3% talk.
Okay. Hit me with the market breadth thing.
Some stocks are getting clobbered. People own individual stocks. Did you know that?
Yeah, but I'm looking at it from an overall index perspective.
Not everybody owns the S&P 500.
Okay, so it's not a stock picker's market right now. Is that what you're saying? Okay. Anyway, inflation screamed higher, so it hit 5.4%, highest since 2008. And of course, in 2008, when it hit that level, it immediately fell back down to earth and went into deflationary territory from the financial crisis. But this divergence here is interesting from a number of perspectives. Like market-wise, I think it's interesting because, I did this piece where I wrote, like, let's say before the year began, I gave you this number. Inflation is going to hit 5.4% over the trailing 12 months. What would you do? Short bonds? That'd be the easiest. Buy gold, that sort of stuff. That stuff's not working.
Right.
Like you could have had the headlines ahead of time and it wouldn't have helped you at all. Bitcoin's down 50% when it was supposed to be this inflation hedge. Obviously, you could say, well, it was up 300% before that, whatever. This is from Axios. How concerned are you about increased costs and household expenses? Very concerned, 46%. Somewhat concerned, 41%. Not at all concerned, 14%. So this is 87% of people surveyed are at least somewhat concerned about inflation. Do you think that could always be the case, though? That's not just right now? You don't think so?
No.
You think this is yes. Rising?
Dude, okay. It's on Good Morning America.
Yeah, I saw it on the Today Show with my wife. It was like the lead story.
This is not really inflation, but yesterday, Robin took Kobe to like a monster truck thing at MetLife Stadium. Looked kind of fun. And so I was sit
that one out.
Well, they didn't have tickets for the baby. Whatever. So I was home with Logan.
You were in the penalty box because you let him puke in the pool.
I was home with Logan, and I needed dinner. And I opened up my DoorDash app, and I was going to get Thai food. A dish was $17. which is already like kind of expensive to begin with for whatever. And then with tip fee, I know we've been through this a million times, but it was $25. I'm not spending $25 for dinner at home. And I just don't understand how the hell this model works ever. Who the hell is going to pay a 50% premium for takeout? It doesn't make sense. It's absurd.
Yeah, I mean, I guess it's the convenience thing. If there's enough people who want to pay for convenience, but I agree at the current model.
Yeah, but you can't pay for that. It's too expensive.
This is the kind of call where we're going to either look really smart or really dumb with no in between.
No, because it can change. The business model can change, obviously. But today, what happened? Right now, it doesn't make sense. So I had frozen dinner, which was not great, but it's better than spending $25.
Okay, get in your car and go pick it up somewhere. No?
I thought about that, but
All right.
Well, I had Log with me. I didn't want to bring him inside. Yeah. Whatever.
Here's the other part of the inflation as a villain thing. Andrew Ross Sorkin wrote about this at the New York Times. He said, inflation has long been seen as an economic villain. That view is changing. He points to like this study about how this study of developed economies found that as inflation rose, income inequality tended to shrink. Inflation could be as high as 13%, the research found, and still act as an equalizer, shifting the benefits of economic growth toward lower income individuals. I don't buy this really.
I have this study open. I want to read it, but it's fairly controversial. I mean, higher inflation is better for income inequality.
But the thing is, I can see that being that actually being that's legitimate. But I don't think that would make people any happier. I think people would still be upset with higher inflation.
Well, we've spoken about this. How if your wages are outpacing inflation, like you feel inflation more than your wage increases.
Right. But the weird thing about this, so this is from Heather Long. She wrote about the year-over-year changes in inflation and broke them down by components. Car rentals, 88%. Used cars, 45%. Gas, 45%. Laundry machines, 29%. Airfare, 25%. Moving, 17%. Hotels, 16 or 17%. It's like, if you don't use those things, and a lot of people don't, how is inflation in your life any higher? Like, it's so segmented to these one places. So Ben Carlson says,
whoa, hold on. Who doesn't? Everybody uses gas.
Okay, sorry, gas. But if you're not in the market for a used car or a laundry machine or airfare right now, the 5.4% inflation means nothing to you. So Ben Carlson said, used car charts are up 45% from a year ago, 10.5% from the last month. Car prices account for a full 30% of the total increase in consumer prices from the pandemic since February 2020. Put another way, overall prices are up 4.7% since the start of the pandemic, but prices for everything except cars are up 3.5%. You hear this stuff about the rental car agencies that they sold all their fleet and then they had to scramble to buy them back. But who else is buying so many used cars?
Well, I've people whose leases come up.
All right, so NPR.
Hang on, I've got a used car. My car comes due in December. What am I going to do?
You're not going to buy a new one?
Of course I am. I have no choice. My lease is up.
But I'm saying, so this thing from NPR and Marketplace said that there are 16 models of 2019 vehicles where the used one is more expensive than the new one now. This is just bananas.
Well, it's got to be an availability thing. There's got to be way more used than new available.
Yeah, it's because of the car chip stuff, and again, that'll sort itself out.
This is an interesting lead in the Journal. Chevy Silverado owner Franco Dokaj, Dokaj. That's an interesting name. Franco Dokaj stopped by his dealership recently expecting to buy new floor mats. Instead, he walked away with a killer deal. The store offered to buy his 1-year-old truck for $3,000 more than he originally paid for it. Remember when cars were a depreciating asset?
Yes. Don't take a car loan out because it's a depreciating asset. Okay, Matthew Klein, who now writes at The Overshoot, is planting his flag firmly in the transitory camp. He says outside of a few categories that are either experiencing significant idiosyncratic supply constraints or healthy price normalization due to reopening, prices rose about as much as could be expected. So he broke out. And this is the thing that makes the zero hedge crowd really mad when you say, oh, of course, inflation isn't here if you take off these 5 things that are rising. And to some degree, I get that. But he's saying take out the pandemic stuff, the used cars, the reopening categories, and the underlying inflation is basically about the long-term average. So he's saying this is going to go back down. I think the weird spot for a lot of people, especially in the pundit crew, would be some people are saying it's going to go right back to 2%, and other people are saying no, it's going to stay at 5%. What if it just rose a little and it's like 3%? And that's not enough to get the hyperinflation people happy. and it doesn't really go back to the long-term trend. It's a little higher than it was. That seems to me to be probably the path of least resistance, right? Like some of these prices just have to stick because wages are getting higher in certain places.
Right.
That's kind of the way that I follow it. That it's I don't know. So you've seen this chart before, right? From Mark Perry at AEI, and he breaks out. I mean, this is probably the best inflation chart there is, right? He shows since the year 2000 what's gotten more expensive and least expensive, and he shows overall inflation has been 60% in that time. Consumer prices have risen that much. And then he shows how healthcare and college tuition and childcare and all this stuff is above it. And surprisingly, average hourly wages are above the rate of inflation. How many people, if you surveyed them on the street, would say that this century that inflation is outpacing, or wages are outpacing inflation?
Few understand this.
There you go. Never a big fan of that one, not going to lie. Sorry, I can't get behind it.
I like it.
All right, you would. But new cars are basically flat. Furniture's flat. Clothing is down a little. Cell phone is crashed. Computers crashed. Toys have crashed. And TVs have crashed. And
my TV crashed. I still got that line on my screen. Not caving.
What are you going to wait for? Are you going to wait for Black Friday?
Haven't
get
decided
a deal?
yet.
Okay. Do you think we'll have good Black Friday deals this year with the inflation and all? I mean, how am I supposed to buy my significant other a Lexus with a big huge bow on it if car prices are so high?
I wonder if
I'm drowning here.
if the December to Remember doesn't have a bow this year, because prices for bows are too high.
So here's the craziest one though. Since January 2000, TVs are down 97%.
What do you mean? Oh wait, what?
Inflation wise.
Wow.
So I'm sure that part of that is the quality stuff too. Think of how much better TVs are.
My first flat screen TV was like $2,700, and it's 32 inches.
Yes, that's what mine was, like 37 inches, and it was way more expensive than the 55-inch one I have now. So I guess the quality has improved everywhere, but your 82-inch TV that has a line across it.
Unbelievable. Lumber prices have crashed. We haven't spoken about that.
Big time. Like, so it was up 165% through as of a few months ago, and now it's negative on the year.
Is it back to pre-pandemic levels, or is it still?
See, I think this is a good use case for.
Yes, it is. It is back to pre-pandemic levels. How about that?
Okay, so I think this is.
I should clarify. It's not back to pre-pandemic levels, but it's at like the 2018 high. So.
Yeah, but still, if you're buying a house, this is good news. But here's the thing, though: will the builders actually lower those prices, or are they locking them in? Right? Don't you think that's the kind of thing where these companies are going to be way quicker to raise prices than they are to cut them?
This is great.
They'll take way longer.
This is the case for stocks right here. Those from the Journal. An analyst recently asked KB Home chief executive on a conference call if the big home builder would share lumber savings with house hunters, lowering an average asking price that rose 13% during its second quarter, or boost margins, which have climbed to their highest level since 2006. This was his answer. It will depend on the competitive landscape in each city, which is bullshit, because this is the part that matters. But our hope and expectation is that we'll take it to margin. Here's another one. Lennar basically said the same thing. Lennar too expects higher margins so this is why you own stocks, because prices only come up. They never come down. And that's the part of it that's not transitory. Obviously, well, I shouldn't say obviously. Some people do think the rate of inflation at 5% will remain. That's going to come down. Like we're not going to get 5% inflation for the next 3 years. God, I hope not. But what's not transitory is these price increases are not coming back down.
Well, hopefully this will be the kick in the pants to get these builders to build more homes, because they were hesitant to build homes for a while because the costs kept rising. So now if they've got a little more buffer in their margin, hopefully that means that they're starting to put their foot on the gas and build more homes, right? That would be the hope, at least.
All right, so labor has the upper hand for the first time in a long, long time. McDonald's is bumping its starting pay from $11 to $17 an hour.
On average, yeah. I think that's an average, but still, that's much better.
Did they say that they're going to start like offering other incentives, like student loan repayment, or am I making that up? I feel like I read that somewhere.
Tuition. They're going to offer tuition help potentially. The other thing you get. So have you been to fast food place lately? My kids still love McDonald's. They like the cheeseburgers there. We went to one this weekend at a drive-thru, and there was a sign on there, and I think I've seen people post these on social media. It was like, "Hey, we are understaffed. Please be patient with us in this time while we don't have enough people here, and stop yelling at our employees." But if you're in one of those jobs that's like the quit thing is at an all-time high, that's got to be part of it too, right? Like people say, like, I'm not going to put up with this.
Right.
These people yelling at me all the time for bad service. You would have hoped that people would have thought like, okay, these are the frontline employees throughout the whole pandemic. Let's cut them a little slack. And no, people are yelling at them and
so we know
some of their burger factor.
Job openings. Well, Ben, stop yelling at McDonald's employees.
I'm no, in the drive-thru I'm yelling at my kids to be quiet so I can put my order in for my chicken sandwiches.
Small businesses, you get chicken sandwiches at McDonald's?
They got their new chicken sandwich that they tried to copy Chick-fil-A's. It's probably 60% as good.
Okay, so we've got 9 million job openings, most ever. Obviously, small businesses with hard-to-fill job openings, there's a survey, is at an all-time high. What's interesting is that they also show this chart of the percent of small businesses that are raising prices. It's 45%. Raising workers' compensation, only around 30%.
Interesting. So they're quicker to raise prices than they are quicker to raise wages.
So most of the time, these lines track each other, but not always. I'm not quite sure why, but the raising prices got ahead of raising worker comp in the mid-2000s.
Okay, so maybe we'll play some catch-up there. They're going to have to, right?
You would think.
All right, this is from Goldman. Maybe this is a good thing on our Robert Gordon book we always talk about, the rise and fall of American growth. Since the crisis began, annualized growth and output per hour has risen 3.1% compared with 1.4% in the previous business cycle. Goldman's economists say stronger productivity growth has been one of the silver linings of the pandemic. By the way, how often do you hear people say this? Listen, they preface it with, I know the pandemic has been bad and it's hurt a lot of people and killed people.
I do that. You have to.
I know. But can't we I think we know that at this point.
Anyway. It's too soon. You still have to say that.
All right. So they say those gains are most visible in sectors that can take advantage of virtual meetings. And they say the big thing is people not having to commute. Like that's a big productivity thing. Don't you think the other part is just there's way less bullshitting with your coworkers? Right?
Yeah.
You don't get, people aren't coming into your office all the time.
There's no nonsense.
Yes. You don't have as many, and whatever. I'm sure some people enjoy that banter and the before meeting stuff and after meeting stuff. Let's take a walk, on the way to the meeting and talk about stuff you don't care about. As someone who is anti-small talk, I hated that stuff. Always hated it. That's how you're worse at small talk than I am. Compared to you, I'm like Chatty Cathy. It's just never been my thing. So I work in an office alone, and I never have to talk to anyone throughout the whole day if I don't want to. Except you, but that's a phone call. It's not like a chit-chatty small talk like, hey, so what'd you do this weekend? That sort of thing.
There's somebody tracks the New York City turnstiles charts. They are still so depressed. I really don't think that's ever coming back. Like to maybe 80% tops.
So I think the James Altucher New York is dead thing was like a total troll job. And then you see, people on social media.
Wait, are you saying that he just wanted to get a reaction out of people?
Can you imagine the crypto guy with Bitcoin eyes? But obviously that no one ever really thought big cities were dead. But saying that like big cities are impaired and in for a rough time from what they were pre-pandemic is still like, that's an okay take to have.
Yeah, I think some of the stuff in New York City is permanently impaired.
Right. Yeah. It's a different world now.
Rents are basically all the way back.
Are they?
Yeah.
Okay. So you had a chance as a young person for a while there. Now it's...
So, all right, pandemic relief is coming to an end. The eviction moratorium ends on July 31st.
Every time I post a piece about, or we talk about real estate, someone throws that in my face and say, just wait till this happens, then the real estate market is going to crash.
Well, all right, come on. Mortgage forbearance, September. Student loans, probably September. Do we talk about unemployment?
Don't you think savings for everyone is so well stocked at this point, it probably won't matter for a while for any of this stuff?
I think it's going to matter.
Like overall economy-wise or just certain households?
Probably. I don't know that we're going to see it in the data. Actually, no, I do think we're going to see it in the data. I think this is going to matter. Unemployment, the extended unemployment is coming to an end, but there was an article in the journal showing that half of all states have opted out of the extended unemployment. And nearly all of the states that have opted out are led by Republican governors. The only state led by a Democratic governor actually that opted out is Louisiana. And the data, it's early, but June unemployment rates tended to be lower in states that have opted out early, which probably isn't that big of a shock. You end unemployment benefits people get back to work.
Right. So this whole
Or people
worker
have
shortage
more
thing
urgency. People have more urgency to get back to work.
right. Which makes sense. So all those unfilled jobs hopefully will get filled soon.
Yeah. So that 9.2 million number that we're seeing, I think that's going to pull back significantly.
Yeah. Again, this whole experiment that we've run here is going to have such interesting economic research stuff, right? Because you can see like this program ends on this date. You can see what happened when it was instituted, then when it was stopped. Like that's going to be fascinating to look at, like how that changes people's behavior.
Somebody sent this to us. Dave Ramsey posted this on Instagram. How to invest your money. And there's two buckets. Invest in, don't invest in. And there's some nits to pick. Like, for example, I thought this is kind of interesting. He says invest in mutual funds, spread equally in 4 categories: growth and income, aggressive growth, and international. All right. I don't want to spend too much time there. You could form your own opinions, but this part really stood out, and I'm not exactly sure what he's going for here. The don't invest in: single stocks, Bitcoin or any cryptocurrency, whole life insurance policies, annuities, bonds, micro investing, and the last one is where my eyebrow really is raised: REITs, ETFs, and CDs. And particularly the ETFs one has caught my attention. Why would you make a blanket statement, don't invest in ETFs? What, if I had to guess, I would say he's saying because you have the propensity to trade too frequently. What else could it be?
Here's the thing. When you become a huge influencer like this, you can't have the same advice as everyone else. You have to stand out from the crowd and get people mad every once in a while, because your devotees are not going to care what you say. They're going to do whatever you tell them to do. I'm sure that's.
But
all
is Dave Ramsey a troll? He doesn't strike me as a troll.
I just think you have to have like something that will make you stand out to make people mad. Oh, definitely a troll.
Really?
So is Susie Orman. Yeah, they know what they're doing here. You
Okay.
think Dave Ramsey doesn't know what he's doing when he puts something like this out? Because he's basically chopping off. Don't go to a place like iShares or Vanguard or something. Invest with us.
I guess
right?
I'd go the other way.
If
If you have such a big audience, why troll?
Because what else are you going to do? You already
Or
have
I
money.
should say, if you have such a devoted audience.
Think about every influencer in the world is a troll. Dave Portnoy, huge troll. Elon Musk, one of the richest men alive, enormous troll, right? That's what people do these days. They troll. If you get big enough audience, you start poking things. Sorry, every big influencer in the world is a troll.
I wasn't trolling with the Tomorrow War. I was being earnest.
I don't know which is worse. No. Okay, speaking
of... Is Harry Dent a troll?
I honestly don't know. So this is from ThinkAdvisor, and they call him the Contrarian's Contrarian. He says the ever-building market bubble is likely to blow at the end of this month, if not September. Stocks
he's never said that before, right? That stocks were about to crash?
Stocks have no place in investors' portfolio, he argues, forecasting that most equities will plummet by 80% by autumn.
You know, most stocks can fall by 80%, and if the index was down 10%, you'd say, see? Index is only down 10%.
All right, this is the biggest crash of our lifetime, yada, yada, yada. This guy is...
Wait, don't yada, yada. I want to hear what he has to say.
Okay.
I'm only kidding.
Yeah. Okay, so I did this Harry Dent post a while
ago.
Wait,
oh shit, Ben. The worst year for the stock market in our lifetime is likely to be around the end of 2022.
Yes, but the funny thing is, they asked him, they said, hey, you predicted a crash 9 months ago. You gave us the date. And he said, well, it would have happened if it wasn't for the Fed. This is what happens. But so I looked through his old books. He got the first one right and has been living off of that since. So he wrote The Great Boom Ahead in 1994.
Good call.
Right? Nailed it.
Yeah.
All right. 1999, the Roaring 2000s. The 2000s were arguably the worst decade ever for the stock market. Right? We had 250% crashes, and you lost 3% a year in the S&P 500.
Right.
Then he wrote The Next Great Bubble Boom, How to Profit from the Greatest Boom in History, 2006-2010. Whoops. Oof. Then, in 2009, basically at the bottom, he wrote this in January, 2 or 3 months before the bottom, The Great Depression Ahead, How to Prosper in the Crash Following the Greatest Boom in History. Then, doubled down in 2011, The Great Crash Ahead, Strategies for a World Turned Upside Down. He was predicting a 2012 to 2015 depression. Roll it back one more time. You think he just writes the same books and changes the dates? The Sale of a Lifetime, How the Great Bubble Burst of 2017 to 2019 Can Make You Rich. And finally, this is your coup de grace, stealing a Michael Batnick term. March 19, 2020, this came out. What to do when the bubble pops. Personal and business strategies for the coming economic winter. Basically, bottom ticked the pandemic crash.
All right, listen. So he's a little
4 days.
He's a little early.
I honestly would. I mean, he's probably sold millions of books.
Mm-hmm.
Most of these books have 4 and 5 stars. Hundreds of reviews. They were all ridiculously wrong.
I forget who said this. Like, it was Jason Zweig. He said like, lie to people who want to be lied to. Tell the truth and you can make a living. Blah 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 blah. Lie to people who want to be lied to and you can be rich.
I guess that's it. I'm sure he's made a ton of, and it is one of those things like, it's not
That's
a lie
crazy.
if you believe
That's
it.
crazy.
Like, does he really believe it?
All the 4-star reviews. Wow.
I mean, I don't know. I guess follow him at your. Oh, jeez. I don't know what to say about this kind of thing, right? He should be blackballed from the industry after one of these books.
I would like to, for a lot of people like this, like just hit him with some truth serum, like a dose of truth serum.
Yes.
Like, do you believe this?
Yeah. Come on.
And what's worse? I guess it's not even close. If you believe it, okay, fine, you're wrong.
No, this is our type 1, type 2 charlatan.
Yeah. But if you're deliberately misleading people, that's like 40,000 times worse.
Yeah, I can't tell. I mean, I don't know.
Anyway, so what are you doing to protect yourself
from the 80% crash that's coming? I got nothing, man.
Okay.
I'm buying t-shirts on Instagram like you. Those are gonna hold their value.
All right, let's I don't know, we pivot away from this, but we got a listener question. In episode 212, you guys briefly covered Social Security. By the way, 212. Holy cow.
I think we're coming close to 300 actually. So this is a while ago.
Okay. We are the living embodiment of the show must go on. We started this show in November 2017. How many shows have we missed?
I think we missed one very early on.
0.
No? Did we miss 0? Okay.
Oh, did we miss one?
All right.
All right. If we missed one, I've been telling myself we've never missed a show. Maybe we missed one. I don't think
the first 2 or 3 months into the show, we missed one. I went to Disney World or something, and we couldn't get the recording equipment to work.
All right, fine. Anyway. But in 3 years, we haven't missed one.
Keep patting yourself in the back. Yes.
All right. All right. Anyhow, you guys briefly covered Social Security, it being 17% of the national budget, how hard it would be for Congress to cut it, et cetera. What about an opt-out whereby individuals can forego their Social Security benefit in exchange for, all right, I don't even want to continue reading because I think this is such a bad idea. Not to be too harsh to the listener, thank you for the comment, but only because think about how some people like are anti-Social Security today. Imagine what that would do to the us versus them and like the welfare state and rich versus poor. I think it would be horrific if people could opt out.
And Social Security is like how housing is forced savings for people. That's forced savings, and a lot of people, that is their entire retirement nut. So yeah, I think giving people the option of taking it out is probably not for if you are someone who has your finances in order and you say, no, I want to invest in stocks, I'm sure it sounds great. For the majority of the population, not a good idea.
This was an amazing listener comment. You guys touch on some good stuff today on the podcast regarding kids and money. I have a 14 and 12-year-old, so it's something I think about a lot. He's saying it's hard now because like nobody carries cash anymore, so it's hard to do it that way. Oh, he said, especially if like you grew up, if you are a person of means, you have to create artificial scarcity. So don't buy unlimited data plans for their phones. Force them to choose 1 to 2 streaming services. Tell your kids no a lot and make it clear that it's not because you can't afford it, but because you choose not to spend your money that way. Teach them about making a quality purchase and avoiding junk. Don't buy things the first time they ask if they're serious. So I love it. The idea of creating scarcity, like, and like being very specific about ways to do it. I thought this was great.
So this weekend, a punishment for my son and daughter because they weren't listening very well. No ice cream for Saturday night. Guess who was punished the most out of that? Me. Why? I didn't get any ice cream either. I should have gotten it and ate it in front of them probably, right? But so this is the Bitcoin approach, the scarcity approach, right?
Listen, we only have 10,000 finite dollars in the bank.
No,
There'll never be more dollars.
I do like this idea. Okay, this child tax credit. I think this is being
Is this underreported?
Hey,
same page.
Okay. Maximum credit is $3,600 for each child under 6, $3,000 for each. So this is, guess what? This makes up a lot for the stuff rolling off. I think this only goes through the end of the year, and they're trying to make it permanent. But so this is 6 months or so where you're getting. I mean, if you had 3 kids, you could be getting thousands of dollars a month. Like think about how much money you could be getting with a group of young kids to pay childcare, to pay whatever. This is a lot of money for a lot of people.
Yeah,
it phases out above what 150 grand or 175 grand if you make combined, but this is a lot of money.
This is a big deal. Speaking of being flush with cash, private markets. So CB Insights has these great charts showing just what's going on in private markets. So, for example, there were 136 new unicorns born in the second quarter, up 491% year over year. It used to be like in the 30s, 40s. Now it was 136 in Q2. I think we need a new phrase for a unicorn. Like $1 billion is not a lot of money anymore, thanks to inflation.
You and I have talked to a handful of fintech startups, and it seems, I mean, if you had an idea right now and you can't get it funded, something is wrong with your idea, because everything is getting funded and people are just lining up at the door to throw money at these places.
Global funding startups. Eye-popping record. How about this? In Q2 2019, it was $69 billion. Okay? $69 billion in 2019. In Q2 2021, it was $156 billion. Median valuations are at an all-time high. And I think maybe this is like a lot of people in Silicon Valley, and I don't really have evidence for this. This is sort of anecdotal. They seem to be the inflation people.
True.
And I think one of it is like maybe, I don't know if it's their lifestyle or whatever, but they're seeing things like this. Like we used to be able to invest at a $10 million valuation and everything's getting more expensive.
Well, they also live in the most expensive area of the country.
Sure.
That doesn't help. But the other part of this is some people see this as, if you're a glasses half empty person, you say, okay, they're propping up these zombie companies that haven't done anything yet. The glasses half full thing says, these VC dollars are going to make a lot of stuff happen because there's so much money sloshing around. They're going to give these startups a way longer runway to get off the ground and see if these ideas have legs. And there's going to be companies funded that maybe in the past would have made it.
Yeah, I think this can last a lot longer than people think. Like, let's say that you think that Top Shot is a dumb idea and it's going to fizzle out.
Hand up.
Okay, fine. But how much money have they raised?
Yeah, that's what is a $4 billion company or $7-8 billion? I can't remember.
Like, I'm just going to guess that they've raised, I mean, we spoke about this, I can't remember off the top of my head, but they've probably raised, at this point, hundreds of millions of dollars. You think they're going to go out of business tomorrow?
Right. Exactly. That's the thing. They have so much money to keep them afloat and try new stuff out for a while and on the VC tab.
1 out of every 5 venture dollars in Q2 went to fintech. You know, when I went, so I'm still going through my refi, as I've been complaining about. I was on the phone with the banker last week, literally going over statements. It's just absurd.
We're going to need a weekly update at this point.
It's absurd. I wish that I went with there's a better.com does this stuff. Figure. I guess.
Did you have any brokers reach out to you? Because I had a few people reach out to me with contact details about people to use for refinancing going
A few
forward.
people recommended better.com, but I'm too far. I mean, I'm at the 1 yard line. Problem is, I've been there for
you're on like
4 months.
The seventh down at the 1 yard line though.
But we spoke about this in the past. Somebody sent this to me. About cash offers. More than half of home sales recorded this year in Nassau and Suffolk, which is where I'm from, were cash, meaning like literally like did not have a mortgage. When we say like what is it? No, it's did not have a mortgage. Across the U.S., cash purchases accounted for 30% of home sales, which would be the highest since 2015.
Some of this is also people who already have a house paid off that are then selling it and using that proceeds to buy another house. It's not just that they have a $800,000 in their checkbook or whatever. They actually are selling a house and using the cash proceeds to buy it. Is that?
Yeah,
I
would guess. I mean, not everybody has hundreds of thousands of dollars lying around. So what else could it be?
Yes, it's just a shockingly high number to me. Like that's why I don't see how you could be worried about the mortgage market itself. Besides the fact that the price run just seems unsustainable, the fact that so many people are buying houses with cash right now. I don't know, like how you could worry about this like you did the housing bubble, which was people who were just borrowing and had debt up to their eyeballs. This is a totally different scenario. So it does sound like, Wall Street Journal had one that says like the housing market is starting to slow down a little bit and not get as crazy, like the frenzy, and there's more houses listed for sale. So and they're higher priced too. The number of new listings over $1 million jumped almost 18% through the end of June 19th. But unfortunately, new listings priced under 350 were down 7.4%. So it's showing kind of a divergence there. But this one kind of got to me, and this is why I think like emotions are totally separate from interest rates. So this is this Brooklyn couple, who have their home in the North Fork, which what's that? Give me the lay of land on Long Island. Long Island?
It's like the other side of the Hamptons. The Hamptons are on the South Shore, the North Fork is on the.
So they're saying that they for years had this cottage up there, and it was like a $2.5 million purchase.
But that was a very nice. I mean, can we call it a cottage? That's a beautiful house.
Sorry, it was nice. But they said, like, listen, we were kind of resigned to the fact that we're never selling this. And then they said, house a few blocks away sold in 72 hours for $2.5 million. And they're like, oh, okay, this is way more money than we thought. What can we get for ours? That got our wheels spinning, and then they sold theirs and for whatever. But so this is a thing. Like, interest rates were low before the pandemic hit, and these people could not sell their house. Pandemic hits, rates go a little lower, but not much lower. They're still pretty low. And then all of a sudden, boom, these people could sell their house. This is why like risk appetite and people just getting those wheels spinning is so much more important than the actual level of rates.
Yes, completely.
I know
agree.
rates matter, but that rates themselves cannot get people to move and change their emotions and how they feel about this stuff.
There's no I mean, they could derail it, right? They could cut it off.
Yes,
but there's no FOMO like real estate FOMO. Like if you're seeing friends and family get vacation homes,
yes,
like that seed plants big time.
Yes, it's true. And the same thing, like all the people listing on your block. I'm sure you always talk about your anecdotes of people listing on your block and all these houses. So much of that has to do with, wait, they're selling for what? Now we can sell. Yeah. That's just the way the human brain works. Like, oh gosh. And you're just adding it up in your head about how much money it is. And hey, I can pull some of this money out. And
that person got X for their house. Our house is way nicer than that house.
Yes, exactly. Can you believe it? Have you seen their kitchen? Look at the countertops. That's how much they're charging.
So John Street Capital, who we've mentioned in the past, he great follow on Twitter, tweeted that Apple and Goldman, which by the way, that partnership, we've also spoken about this. Have you ever seen an Apple card in the wild?
No, that's a good point. I have not. Which, by the way, I got my BlockFi Bitcoin card this past week.
And?
I'm going to be racking up that crypto. I haven't used it yet, but...
Well, you should do it because I don't know if you noticed, but crypto's on sale. Only $30,600. So
I buy Bitcoin with the credit card to get those points. And then I get more Bitcoin on that, right?
All right. So Apple and Goldman are doing a buy now, pay later service, Apple Pay Later. And I actually think this could be huge for them. Because if you could buy an Apple product, like how much are the laptops? I don't know. They're expensive. $2,000, whatever it is. If you could buy that and pay it in 20 monthly installments, that could be huge.
I don't get how this is a viable business model, though. This is the thing that doesn't make sense to me. How like a firm in these companies, I mean, this is effectively layaway, but you get the product up front. Like my mom used to do layaway at Kmart back in the day, right? And you'd pay it off slowly, and then you'd get the This is layaway, but you get it up front. I just don't see how the business model works.
There's so much money out there. Who cares about the business model?
I mean, is it just explain it to me. Whoever's selling it is paying some fee to them for doing it?
Merchants are paying the bank.
Right.
And or not everybody gets to buy now, pay later with 0% interest.
Right. You have to have good credit, and that makes sense. There are people who are paying higher interest. Okay, before we get to listener questions, someone sent us this. Someone asked a question a couple weeks ago, like, what happens if the government decides to tax Roths? And this person said, they ran the numbers for us and said, actually, Roth IRAs, Congress loves them because you pay your taxes up front. So they say,
good point.
They calculated that Roth IRAs make a ton more money than regular IRAs. So the revenue loss from Roth IRAs when you're taken out is like $47 billion, but traditional IRAs cost the government $90 billion. And so they're saying that like most of Congress loves that. They want to like turn the 401k into a Roth.
Yeah, that's so
they get the taxes up front instead of in the back end.
By the way, I hope I wasn't too harsh on the listener question about Social Security. I didn't mean to be rude.
Okay.
I feel like I came off a little bit rude.
That's okay. You're a bigger man for admitting your mistake. That's all right.